The Federal Reserve has decided to raise rates again, so they've raised it another 75 basis points. There was word on the street that they might raise it a full 100 basis points, but they ended up going with the 75-point basis hike, which basically it's their way of pretending like they're going to overshoot and then they undershoot it even though they still went up a lot. They do that in a sense to make it so the market doesn't get too scared. So by saying, oh, it might be 100 basis points and then doing 75 basis points, it makes it seem like it's not as bad as it is. But I want to go over the actual details here and why I think they are trying to cause a recession. If they cause a recession, basically what they will do is reverse course. I feel like they're pushing and pushing the lever so far forward that it's going to cause a recession. And then that once they do cause a recession, which under the actual technical definition of a recession, we're already in a recession right now. But if they cause a recession, then they can reverse course and say, oh, we didn't realize there was going to be all of this chaos. Now we're going to drop rates again. So I think they're raising it up to almost reload their ammo and to reload what they can do as the Federal Reserve. And one of the tools, if not the main tool that they use at the Federal Reserve, is to drop the rates, to lower the rates. So if you have your rates down here where they were, you can't lower it unless you go negative, unless you go to negative rates. So by raising it up this fast and this steep, it gives them some cushion to drop it when they need to in the future. So that's what I think is happening. And how do I know that? Well, look what happened back in the 2008 crisis. So when we're going into recession in the 2008-2009 period, look at what the Fed did. They realized that there was a problem and they dropped the rates from 5.41% all the way down to under almost zero, to 0.11, basically to give away a bunch of free money. So whenever the Fed drops the rates down like that, and look at how this is the last recession, you see these gray periods, this is the 2009 recession, you can just see how much they use that tool of dropping down the rates that fast. This time, while we're in a recession right now, they're sharply jumping up the rates. What could go wrong? What could go wrong? Basically, Powell is using needles to fight balloons. That's what Powell is doing right now. It seems to be, at least in my opinion. And so right now we see on the chart, it hasn't updated yet because this is at 2.33%, but they raised it another 75 basis points, which means it's going to be up here at the 3% range. So they're jumping it up higher than it was pre-pandemic, which is pretty crazy to think about, and how fast they have jumped it. So they have... props to them for actually doing this. But what I think is going to happen here is we see a stock market that is still very lofty, in my opinion. Although we've seen a bit of a correction in the S&P over the last year. Let me put the 1 year here. From the highs of just under 5,000 on the S&P index down to just under 4,000. Obviously, there's been a bit of a pullback, but I think there's a lot of room to fall when you look at the 5-year chart and you see that there's still up quite a bit from when you look back prior to the pandemic here in March of 2020 when they started all the money printing. Now, where are all these dollars going to go? Well, in the near term, when you sell off in a stock market, the dollars go into the DXY. And that's why we've seen the DXY literally go straight up. It hasn't taken a breath. It literally is just a triathlon, just running and running and running, has not stopped at all. And what happens when the dollar falls, if you want to keep betting on the dollar to go up, well, then hold your money in a bank and hope that inflation falls and that the Fed can actually fight inflation. But if you believe that the dollar can pull back, like I do, when the dollar falls, gold and silver skyrockets. That's what you need to be looking at as the DXY. And as far as I can tell, it looks pretty prime to pull back. And when the dollar does pull back, which basically I think it's happening in front of us, the hot potato theory we've talked about on the channel. If you're subscribed to the channel, please do subscribe. It's free. Click the button over there. You find this information valuable, I'd really appreciate if you subscribe and hit the like button. Take that split second, hit the like button. But if the dollar index falls, precious metals will skyrocket because it will take more dollars to buy the precious metals. Right now, it takes less dollars to buy the precious metals, so you see them down, the precious metals down when the dollar index skyrockets up. But when the dollar index pulls down, we will see the metals skyrocket. I think that'll happen once basically people realize money in the bank is going to be burnt on both ends by inflation. So now you have a different wild card that we didn't have back in 2009 when inflation's running the way it is, this hot. And I'm going to go over the shadow stats charts. So when they talk about, they bring up the last inflation crisis, which was the stagflation crisis when we were back in the early 80s, if you use that same basket of goods, which props to this Shadow Stats website, you can see that inflation would be well over 15% if you use the actual data that they used back in the 80s, but they've changed that basket to make it look like it's lower. But in actuality, if you use the same basket of goods back in the early 80s, you would see that inflation is over that 15% mark. So obviously it's a lot worse than they're telling us. But what I wanted to go over in addition to these things is basically why I think they're raising this rate. I think that they're going to continue to raise the rates until they cause chaos. And once they've caused chaos and the actual market itself just starts free falling and you see the DXY start free falling, that's when they're going to lower these rates down. And when they lower the rates and they reverse course, that'll accelerate the drop in the dollar, in my opinion. So why is the dollar so strong right now? Because artificially it looks strong to raise your rates like that. But in actuality, mortgages are getting extremely expensive. We're seeing the price of mortgages move up quite a bit in a very fast way because of these rate hikes. What happens when you hike rates? Well, this goes over it pretty well. So credit cards cost more money. The interest rate on credit cards go up. The interest rate on car loans go up. The interest rate on student loans go up, unless you get forgiven and other people have to pay your student loans for you, because that's just a great idea that they're working on over there. Just like the Inflation Reduction Act that spends over $400 billion to somehow reduce inflation. Because that makes a ton of sense, right? So student loans in addition would go up, hypothetically, unless they are forgiven by other people's money. But mortgages will go up in this as well. Saving vehicles. These are the types of things that go up when they raise rates. So to me, when I read that kind of stuff, it tells me that the middle class is in jeopardy and they're basically going to make it pretty much a given that we're going to keep up with the recession. People say that it's going to cause a recession, but it's actually, we're already in a recession. I just think it's going to become more and more apparent that we're in a recession based on what they're doing here. So when they raise the rates up, now they've put it up to this range here, which gives them some cushion and reloads their tool of dropping these rates once they cause a big problem. Let me move myself over here. And when we pull this chart back, I'm going to pull it back to the 80s because they like to bring up the 80s so much. A little further. All right. So when you talk about the 80s, they raised the federal funds rate up to over 20% at one point. This is the Paul Volcker era that they like to talk about so much, and why I showed the shadow stats, because if we use that same basket of goods, it would show that inflation is around the same levels as it was back then, if not a little higher. And they had to raise it that much to stop inflation. So they've raised it to from here to about here is where they're at now. And somehow they're going to stop inflation that is pretty much at the same levels as it was back then if you use that same basket of goods. I don't see it happening. So what I see them doing is playing with fire right now, causing a recession. And then when it's very apparent that we're in a very bad recession, not just the beginning of it like we see right now, I think that's when they reverse course and they start dropping it down to these lower levels here. Now, the problem becomes is they've already had it so low for so long. I mean, all throughout mid 2018 or 2008, all the way until 2015, so 7 years right there, it was pretty much at zero. And then they just started barely raising rates, and the pandemic happened, they drop it down to zero, and that's why they use that tool to give out a bunch of free money, because that somehow helps the economy when you give out a bunch of free money, right? And now they're making it harder and harder to get access to that money, and more expensive to get access to that money. So what does that tell you? To me, I think they're trying to cause a recession. When they do, they're going to reverse course and start giving away a bunch of free money again. And when they do that, the DXY will fall from these lofty levels and it would skyrocket precious metals. That's my personal take on it and what I see happening here. Let me know what you think in a comment down below. Just wanted to make a quick little rant on what I think about them raising the rates the way they are. I don't think they're raising it enough to stop inflation. I think they're raising it enough to cause a real crisis in the stock market. And just overall making it harder to get access to money for everybody. That's my personal take on it. What do you think? Let me know in a comment down below. See you at the next video. And don't forget to subscribe and hit that like button. Really appreciate it if you do that. See you at the next one.